Hello, fellow investors. Welcome to another episode of Ritter on Real Estate. We teach you how to passively invest like a pro. Today, my guest is Chris Larsen. And Chris is a real estate investor in many different capacities. He started out in 21 with $3,000 and has built that into over $1 billion in acquisitions over the last 10 plus years. So, incredible growth. It's allowed Chris to really find his financial freedom, quote unquote, retire early, though I doubt you're just sitting around, and really live the lifestyle that he wants to live. So Chris, excited to have you on today and learn about your journey and pick up some tips from you.
Ken, thank you for that. And yeah, I love that story. Thinking back to that first property with less than $3,000, because people are like, oh yeah, it's easy. Once you hit that point, people talk about buying this property and that property. It's like, yeah, but I started with less than $3,000, which, almost anybody can do, because real estate is it's a get rich slow game. If you build the process, you build your system, anybody can make it work because there's just so many options out there.
Mm-hmm. Yeah. And I think that's a great message for people to hear. So let's go back to, probably even before that, the $3,000, the initial 3,000, just tell people a little bit more about who you are and how you got to be where you are today.
Yeah, I'd be happy to. And if you want to kind of dive into more about my story, I'll give anybody that's listening here, your audience, a copy of my book for free, nextlevelincome.com. If they click in the book link, I'll even send you a copy if you put your address in. But as I share in my book, I didn't want to be an engineer that I went to school for. I wanted to be a professional cyclist. I found the sport of cycling when I was about 13, 14 years old. I did my first race. And from 14 until college, that's all I wanted to do. I went to school. I did well in school. I was like that, typical, good student. Oh, you're going to be an engineer like your grandfather. You should get an engineering degree. And I knew two weeks into my engineering program at Virginia Tech, I didn't want to be an engineer. But it was a good degree to get. And why I say that is it taught me a thought process. And, for anybody that's listening that is an engineer or knows an engineer, you were taught to make a set of assumptions, solve through a problem or a process, and then iterate and improve upon it, which helps in the investment process, right? So, that really kind of laid the foundation. But I'm in school learning and struggling as an engineering student, racing and riding my bike as much as possible. And in between my freshman and sophomore years, my best friend passed away, a massive brain hemorrhage. And I went back to school, and yeah, it was one of, those moments in life where it hits you and it totally changes the trajectory, because in my mind, I knew I wanted to be a professional cyclist. I went back to school. I really did poorly that year, my sophomore year, because I was just kind of using my bike as therapy, and I was training 20, 30 hours a week. I was doing really well. And the next summer came before my junior year, and I was, in all honesty and, kind of looking back, I was depressed, but I put my heart and my soul into cycling. And that's kind of what got me through that period. And I got through the summer. I was winning a ton of races. I was a category 1 cyclist, which, basically you start at Cat 5, you end up as a Cat 1, then you can become a professional. And I won my friend's Chris Strader is his name. I won his memorial race for the second year in a row. And I won it very dominantly. And I came across the line, and I was watching a show last night on Netflix, and they were talking about like hate versus indifference. And I didn't feel anything. I felt like this indifference towards the sport, towards the win, towards the performance. And the next weekend was the state championships. I went there. I dropped out of the race, and my mom was there, and she's like, "What are you doing?" And I was like, I quit. And she didn't realize I was telling her I quit the sport, like in my head, like I just basically quit. I was like, this is it, I'm done. And she's like, well, you never quit a race before. Back to school, stopped racing, sold my bikes. I decided, Kent, that the life that I was living didn't have the meaning that it should have. Riding my bike around in a circle, in a race, just their life, there was meant to be more than that. And I didn't want to have any regrets, not only in my life, but also as if my friend's life was there next to me that I was living it. So part of that, and we all know this, whether you agree with it or not, money allows you to do things in life and allow you to live your best life. So I set out to achieve financial independence so that I could live my highest and best life. And that's how I ultimately began my investment journey. And then the following year, at age 21, I bought my first property, which was that property that we just spoke about.
Gotcha. Well, it's a really interesting story. I mean, you could pour your heart and soul into this sport and ultimately realize that, that there's a lot more out there and a lot more that you can contribute. It sounds like. So what does your highest and best life look like?
Yeah. So, it's easy to scrape together $3,000 and buy a $90,000 townhouse. It's a lot harder to build a portfolio of assets that is going to ultimately allow you to live an abundant, financially, free, where you can do this. So I went and I said, okay, well, I gotta make some money. I spent 18 years in the medical device industry. The first 2 were actually in pharmaceutical industry. I spent a little bit of time learning sales and building up my resume to move into that. And what I found was a really interesting, fun industry where I got to work with very intellectually stimulating people, geniuses. I got to work with brain surgeons. I got to work with orthopedic spine surgeons, and a lot of real people that were way smarter than me. Fortunately, as a semi-engineer, since I have a PE degree or my PE designation, I could understand these concepts, but I was selling. So I got to sell all these things. But what I did was I took the money and I put that into these investments. So, I didn't really have a plan to go out and work with other people. I just wanted to have the ability to pay my bills on a monthly basis. But what I found was, just like I found in sales, I was out there solving problems every day and then helping other people solve their problems and providing value to them. And when I was looking to step out of that career, spend more time with my family, have more freedom, I had this sense of anxiety because I was like, well, I need to do something with my life. You mentioned, and I love it, you said retire kind of in air quotes with your fingers for anybody that wasn't able to watch. Mm-hmm. And it's true. I did not want to sit around. It gave me so much anxiety to think I'm not going to be doing anything or providing any help. So now what I focus on is I focus on helping others achieve financial independence. And Next Level Income, our company is built around the helping people achieve financial independence through education and opportunities to invest and achieve that goal.
Gotcha. Well, very cool. And so what was it, thinking back when you went out and bought this first property, I mean, what was it that turned you onto real estate in the first place? Why do you think that was the right way to go?
Yeah. So, again, if you're listening here, don't spend 15 years making all the mistakes that I did. Hopefully take 15 minutes, listen to my story, and avoid those 15 years. I started off day trading. So I was day trading. So that, I said it took me about a year to buy that first property. I was day trading and I was actually doing pretty well. I was making like $5,000 a month day trading as a junior in college in my free time. But a lot of my time towards that was robbed from me sleeping, because I'd be laying there sleepless at 3 a.m. in the morning thinking what am I going to do tomorrow? I got to make this trade, do this, stop, put the stop loss in place. And it was very stressful, and not every day was a winner. You had a lot of losing days. And in the 90s, the stock market, like today, was very volatile, and you had the tech market and the .com boom, which was amazing, but it was also very stressful. And one of those nights, laying awake at 3 a.m. or mornings, I guess I should say, I said, man, I don't want to be doing this in 20 years. There's got to be a better way. So I read over 250 books on investing. I got an MBA in finance and portfolio management specifically. And when I looked at all the options out there, real estate was the one that bubbled to the top. It was the cream that rose to the top. And the reasons were control. You can control the price that you buy real estate. If you buy a stock, you really just buy it at whatever the price of the market is. You can wait and hope that it goes up or down, but you have the actual control to negotiate the price of a piece of real estate. You have leverage. You have the ability to buy a $90,000 property like I did, my first property with $3,000. You can buy a $100 million property, but you don't need $100 million. You can leverage, other people's money, banks' money, to do that. You also have the ability to control the value of the asset. That could be something as simple as buying a fixer upper that you can then improve and sell it on the other side. Or it could be something, like what we focus on now, and this very well, Kent, of buying a commercial property and improving the cash flow so that you can sell it out the other side. So when I looked at all those business perspective and an investing perspective, I said, if I'm going to spend a time learning a skill set and focusing on one investment, it's going to be real estate.
Gotcha. I mean, it makes a ton of sense. You're obviously speaking my language. I mean, when you talk about being able to control the price you go in, right, and actually be able to negotiate that price, leverage, which leverage in a smart way can enhance your returns, right? I mean, you can't easily leverage a stock purchase, right? I mean, you can go on margin. There's a lot of risk involved in that. And you can push the value and you can force appreciation. I think those are all great reasons. So those 250 books and that MBA kind of got you there, understanding those principles. So you dove into real estate, and then you started out with more single families, right? And built up a pretty sizable portfolio, I understand. And then, so what was it that eventually made you shift into multifamily?
Yeah. So, for anybody that's listening that, is kind of in the middle of their career, they have a family, you kind of get in your groove, So here I am, I'm in my early 30s. We have our first two children, or our children are two boys. My wife and I, we moved from the DC area to Asheville, North Carolina. And I was really focused on maximizing the earnings, because sales in almost any capacity can be a very lucrative career if you're successful, and medical device is no different. So I said, hey, I'm going to be as successful as I can. So I built my career, I built my business. And after doing this for almost 10 years, from kind of start to where it was, I looked up one day and I was kind of doing an analysis of everything. And what happened was my wife goes back to work. My wife's an architect. She's gone to school longer than I have. Okay. And what I figured out at the end of 2012, this was the first year that my wife was working and both our boys were in daycare. It cost us $11,000 for her to work. Cost us $11,000. That's after taxes and daycare. I'm glad you laughed.
I've done that analysis.
It's one of those laughs, like, ha ha. But it's a real problem, right? It's a real problem. And when you sit there across the table from your very talented, and she's very beautiful as well, but my very talented wife, and you literally say to her, it would make sense for you to stay home with the kids. Is that something you want to do? It really sucks to have that conversation. And there's so many ways we can go with that, but for a professional woman, for it to not make financial sense for her to work, that just really bothered us. Mm-hmm. And she said, no, like, I want to work. And I'm like, great. This is, I want you to as well. So we formulated a plan. As part of that plan, she started her own business. She started her own architecture company. And we travel to this kind of business mastermind to help her grow her business. And sitting there in that group, I was talking to a gentleman. I was like, I'm sick of managing these properties. It's like, I'm not really making that much money with these single family rentals, because I had them for over a decade. Mm-hmm. So the equity had grown, but the cash flow hadn't grown that much, Kent. And he's like, you should look into multifamily. And I'm like, yeah, I looked into it. Now, remember, I looked into this years ago. Mm-hmm. I just didn't have the financial, firepower to make it happen. So I had a very simple plan of just buying enough properties to give me $10,000 a month in cash flow once I paid them off. Real simple plan. And he's like, well, you should talk to my friend who does multifamily syndications. I'm like, well, what's that? He's like, oh, he brings in investors. I was like, okay, I'll talk to him. I start talking to him and he starts telling me about the demographics behind multifamily and, all the things that we just talked about. Well, the reason I got into medical device was because of the demographics of the baby boomers. And he was talking about the demographics of the millennials. And I said, are you is this from this author? And he's like, no, it's like, this is this research and that research. And it just really resonated with me. Did the research myself. And I spent about a year digging into it and talking to different operators. What I found was I could get better returns. I could get less work because these were passive investments. And then the bonus is somebody who was a high income earner. I had become an accredited investor at that point. I got better tax benefits too. And it was one of those things where you just want to bang your head against the wall because you're like, why did I not figure this out 5 years sooner? So that's why I say, listen to my mistakes, learn from people like Kent and his podcast, and don't make the same mistakes that I did. Yeah.
Well, I mean, it's a fairly common journey. I mean, everybody's journey is unique, but it's a fairly common path, right? This progression from kind of don't know any different, right? You start out with seeing, I mean, I did the same thing, right? In many ways, we had a very similar path where well, first of all, you work for a bunch of years before you realize like this can get you out of that rat race. Then you look at singles, right? And I had singles and duplexes. I did some fix and flips. I did a handful of things as well. And you start to do the math around that, and you start to say, okay, well, it's a pain in the ass to be a landlord, and it's really tough to outsource it though without the scale, right? It's really tough. You're going to pay a lot in fees. But just in general, it's difficult to scale that. And so I think so many people go through this common path. I think you're right. If you're listening and you can short circuit that path and you can go directly into multifamily or an investment type that scales, right? And multifamily just happens to do that very well. Then I think you can skip a lot of those headaches and kind of turn, really short circuit that process, right? And so now you're investing in multifamily. I know you do some mobile homes, you do different things as well, but are you still investing for the most part passively, or are you actively doing deals as well as a sponsor, or is it a mix? Like, kind of where are you now?
Yeah, so I still am a passive investor, Kent. I still, we've created a passive portfolio, so it covers our basic expenses. And I will say that includes, we have a couple short-term rentals here in Asheville, North Carolina, that my wife operates. So, if you're getting started, I think that's a phenomenal area, is short-term rentals. We have a portfolio built of multifamily, of self-storage. Some of those investments include things like car washes and Bitcoin mining funds. So a lot of stuff that helps us optimize not only our cash flow, but also our tax burden. But we also are active in these investments as well. So we have a single family development that my wife and I are partners on here just outside of Asheville, like literally just across the line, south of Asheville. Again, I mentioned we operate, the short-term rentals here. We have an office building in downtown Asheville that we actively participate in. And then with our syndications, we're also active in those as well. So when it was just me and my one partner starting out, we kind of did a little bit of everything. And now I focus more on the underwriting of the assets, working with investors, as well as trying to figure out, the capital structure and, what our firepower can be and what we could really go after from an acquisitions perspective.
Gotcha. So you're kind of a mix of both. You have a passive portfolio, which has allowed you to have that freedom, it sounds like. And now with that freedom, you've gotten more active and now you're actively involved in projects as well. It sounds like you're doing some pretty interesting things. So I think that's also a great message. It is fun, right? And you have that passive base that kind of gives you that security, right? And you've spread that, it sounds like, across different asset classes, not just multifamily, storage. I know you mentioned other things as well. So I think that's a great approach. I mean, I really think it's a great approach. I think you're kind of set your base, you've got your living expenses taken care of, and that gives you the freedom to now go and kind of pursue whatever you want, which sounds like some developments and office buildings, some other different things, right? So, I think it's a fantastic story. So, just thinking about, how folks, the theme of this has kind of been, how do we short circuit that process? How do we get folks there faster? I mean, what's your recommendation if somebody's looking to make their first investment now? Maybe they're looking to become a passive investor. I mean, how how should they start?
Yeah, that's a great question. So, the next level income strategy, if you will, is we talk about first, make as much money as you can. So first off, are you maximizing the amount of money that you are making in your career and your business? So really focus on that first. People like to jump ahead and say, hey, I'm going to start investing. If you can invest in your business or your career and time, and you can increase your earnings 50 to 100%, that is going to be the lowest hanging fruit.
Mm-hmm.
The next thing you should do is optimize your tax strategy. Now, I know you asked me basically like, what's your first step before investing, as you learn to invest, but
mm-hmm.
if you're leaving, say, $50,000 on the table because you're paying too much in tax because you're not utilizing a proper tax strategy, well, I mean, that's a lot of money that you could use to make another investment or increase your investment. So make sure you have a tax strategist, not just like a accountant that you send your receipts to at the end of the year. Then when you're ready to formulate a plan, figure out what your basic expenses are, what your risk tolerance is. So again, some people may say, well, Chris, I'm happy trading, and that's a good strategy for me. You and me, Kent, maybe we don't like that strategy so much, but educate yourself enough to figure out what areas make sense for you. Do you like short-term rentals? Do you like multifamily because of the stability, that multifamily has? Do you like some things that are higher cash flow? Like car washes or something that we started investing in pretty early in the past year because they're higher cash flow, but they're also a business, not just a real estate play. So you have to be conscious of that. Mm-hmm. Once you decide on what sector makes sense for you, then go out and find a partner. What I mean is find somebody that you can invest with that also shares a similar strategy. So when we made our first multifamily investment, the gentleman that I got introduced to, what he said from a strategic perspective really resonated with me because he followed the same data that I did, and it made a lot of sense for me. So I asked him a lot of questions. I said, yeah, I'd be comfortable investing my money with them and in the same areas of the country. And then talk to a couple of others, make sure they can answer your questions, make sure they have a track record. They have successes, they have failures that they can learn from. And then once you have gone through that process, and this doesn't have to take you a full year like it did me, you can do this in a month or two. Once you have that in place, then decide how much you do invest over what time period to achieve your goal. And when you have that plan in place, then start to execute it on a yearly or a quarterly basis and stick to it. Don't be like, hey, I'm going to invest in one deal and see how it works out in 5 years. That's really not going to get you anywhere. You have to have a plan. You have to have the right partners, and then you have to have the discipline to consistently invest. And that's going to allow you to actually create a meaningful stream of passive income.
Yeah, I mean, I like that. That's simply laid out. And the point you mentioned first, I think is often overlooked because I think people get excited about new opportunities, but maximizing. I guess I've had this conversation with a couple people over the past few weeks of folks that run successful businesses but are interested in real estate, and I've said the same thing to them. I said, look, you of course can go and start investing on your own in real estate, and you're learning something new from scratch, right? And the time that you're doing that is not time you're going to be focusing on building your already successful business. Or you could really double down on just focusing on building your already successful business and taking it, higher and higher and higher and creating more income, and then also investing in real estate at the same time. And I think, I think, entrepreneurs like to have control, right? Some of it's probably a control thing. I think some of it's just the excitement of doing your own deal. But I think I agree with you. It's like, if you have something that's already going well, something that you're already an expert in, and you can really maximize that, I mean, that's going to be, like you said, your lowest hanging fruit. And so I think that's a really important thing for people to think about is, if you're doing, like when I was a consultant, I used to tell clients this. I kind of have this analogy. I would actually draw these two circles on the whiteboard, and it'd be like one with an arrow, like going way up, one arrow, right? And the other with like 20 arrows that are all kind of small. And it's like, you can either go really far in one direction, or you can go an inch in 20 different directions, right? You can't do both. And so I think like that's the point is you have to be able to
Great point.
focus. You have to be able to focus. And if you've already got something that's going well, like make sure you're maximizing that first, right? And because there are ways to invest passively in other things. So you got to decide if it's something, is it your highest and best use, I guess is the right way to say it, to go into something else. And maybe it is, but I don't think it is until you've already really maximized what you've got going. And then I thought your take on taxes as a starting point, kind of a second step, I think is a good point, because it really does impact so much what we do in real estate, right? And I think that if you can make smart investments that are also tax advantaged, and like you said, if you're leaving 50K on the table, I mean, that's the lowest hanging fruit, because you already had it, you already made it, right? It's just how do you avoid giving it away? And I think that's super impactful as well for people. And if you have that extra 50K and then you can actually go invest that, well, then what does that do for you? Then it starts to compound. And so I think that's a really great step. I'm glad that you shared that approach. I think that's thoughtful for people, and probably starts a couple steps ahead of where we usually start, which is like, find somebody to invest with or find a partner or learn as well. So I think, well said.
And as a corollary to that, if you're listening, you're like, well, hey, Chris, I want to go become an operator. What better way to learn how to be a great operator than invest with a great operator that you can then learn the mistakes? Because those operators we initially invested with, we learn from their mistakes. So if you do invest, regardless, even though we say it's passive, try to take an active role in the learning and understanding what people are doing well and what they could be doing a little bit better.
Yeah, that's fantastic. And just continue to mirror our journeys. That's exactly what I did as well. I mean, I started in 2015 passively investing with other people as I was doing kind of that other stuff on the side on my own. And it wasn't until 2019 where I actually led my first syndication and bought some large multifamily. So it was like the 3.5 years of learning in that process. And there were some great learning moments. There were some capital calls that happened and said, okay, well, I don't want that to happen to me. So how do I avoid that? Right. There was bad communication that occurred. It's like, well, that doesn't feel very good. So how do we avoid that? Right. There are a lot of lessons learned, I think, through that process. And so really good tips, Chris. I appreciate you bringing these up. Before we let you go today, I want to take you through our keys to success round. And I've got 4 questions I want to ask you. The first one is, I think, right up your alley. If you were going to invest your money with somebody else in their deal and you could only ask them one question, what would that one question be?
Wow. That's so I think, we just kind of talked about this. You learn more from your mistakes than you do from your successes, right? And I think really important right now in this phase of the real estate cycle, because things have been going so well for so long. Yeah, we had COVID, there were some blips, but multifamily especially came back stronger than ever. Ask whoever you're investing with, hey, what's the biggest struggle? Like, what's the point that almost broke your business? And how have you changed your business and your strategy to be bulletproof to those mistakes in the future?
Yeah, that's a really good one. I mean, you're absolutely right. You learn more from your mistakes than you do from your wins. And so I think
love
that's
that
really
question
powerful
too. When an investor asks me,
I think it also shows, hopefully, like, how transparent are they? If they say, oh, well,
exactly.
we've never had anything bad happen, then they either haven't been doing it very long or they're not being very transparent. So yeah, multifaceted. Yeah. What are you most proud of in your career?
So I take a lot of pride in being a father. My father passed away when I was young, when I was 5 years old. And, I always say, I want to operate in a way that my boys will look at me today and when they're older and say that they're proud of me as a father in the way I did. So whenever I'm looking to make a decision in business, I say, okay, would my boys be proud of this decision if they knew about this? And most proud of is that every decision that I've made, I can tell them about, and I feel like they would be proud of that.
That's awesome. Yeah. What's a book that everybody should read?
So this is going to be a little diversion away from the financial realm. And, people who know me probably think like, wow, Chris is like, he's a financial fanatic, but I'm actually more passionate about one thing, even more than finances, and that's health. Because, you know, money can buy you some time and it can help improve your health. But if you do not have your health, you're going to want to focus on that. I love the book Lifespan by David Sinclair, and he's got a great roadmap. And really, I'll give you a sneak peek into it. David Sinclair believes that aging is a disease. It's not inevitable, and we can reverse it. So if you want to really make an impact on the world, just think what you could do if you could extend your life from 80 to 120 years, and you could have a massive impact on the world if you're able to do that.
Interesting. I'll have to check that out. I haven't heard of that. And then last but not least, Chris, what is your number one key to success?
Yeah. So my number one key to success is you need to be curious and humble. So you need to always be learning, and you always need to be looking in the mirror, analyzing, and be open to criticism and to ways that you can improve yourself. And again, I think this goes back towards, being a father. We're giving our children advice. We're trying to educate them. Do you have somebody in your life that is a coach, that's somebody that's holding you accountable, helping to push you and give you feedback so you can continually improve? And that's something, that I've tried to implement, whether it's, as an athlete, as a business owner, or even as a husband and father, working with professors that help improve my relationship, both with my wife as well as my children.
Well, great advice, Chris. Appreciate you taking us through those rounds and answering those questions. And if people want to learn more about what you're doing, if they want to learn more about your business, how can they get a hold of you?
Yeah, check us out at nextlevelincome.com. I mentioned earlier, you can get a free copy of our book there. You can check out our podcast, our blog. If I've touched on something and you want to reach out directly to me, feel free to email me at chris@nextlevelincome.com.
Cool. With that, Chris Larsen, thanks for coming on the show today. Thanks for sharing your path, your journey, and giving us some tips, helping people reach financial freedom. And we hope you have a great rest of the day.
Kent, it's been my pleasure. Thanks for everything you do here and for your audience.